Okay, it's 4:30 and time to get started here. Want to take this opportunity to welcome everybody to today's event, Powerful Scanning Strategies for a Strong Earnings Chart List, Monday, August 24th. And you got John Hopkins here. Tom Bowley going to jump in just a minute. I'm going to be very brief so we can move on to the main event. I want to welcome anybody new to Earnings Beats. We've got a lot of people on trial who are trying us for the first time, other people maybe who are considering a trial, and of course, our many wonderful veterans for many years. So thanks everybody for taking the time to stop in today. All of our events are recorded, including today. So if for some reason you're not able to stick around for the entire event, no problem. We'll make sure everybody gets a copy of the recording. Tom's going to go through his agenda. And if you have any questions, maybe hold them till the end. If there's something important you want to ask, I will be checking questions as we move along through the event. And if I can answer them, I will. If not, and there's time at the end, Tom will answer them. Also, for some reason, your question doesn't get answered, just feel free to send us an email, go right to the website, and you can always write us and we'll do our best to get back to you promptly. Okay, I'm going to see if Mr. Bowley is in the house. How's it going, Tom?
I am in the house. It's going well. How are you doing?
Good. I just was looking at or listening to a story on CNBC about Apple, and they said that the market cap that Apple tacked on for the month of August would make it the 10th largest company in the world. In other words, the 300 and some billion that got added during the month of August, if Apple wasn't already an existing company, it would be the 10th largest. So we've got some pretty amazing things going in the market. This bull run is relentless.
Yeah, it's been pretty impressive. There was a lot of rotation that took place today. I saw a lot of companies, and some of this may have been options related too, because there were a lot of the growth companies that have had a pretty big run the last week or two. Didn't really participate today. I saw a lot of stocks, like the Zooms and the Pelotons and those types of companies that had done so well throughout the pandemic. And some of them are pretty heavily traded in options, and there were a lot of in-the-money calls at the end of last week. So I'm not too surprised some of those companies came down. I think even in the short term, we could see a little bit more selling in those names. And it's pretty interesting, though, the ones that were really beaten down coming into this week were the ones, for the most part, that were leading. Saw airlines having a big day today, cruise lines, some of the travel and tourism stocks. I mean, it was kind of a flip, and it opened at the very beginning of the day. Growth was leading value stocks, and then it flipped literally in the first 5 minutes of trading. Everything kind of reversed.
Yeah.
So but that's good news, because not that you want to have stocks that aren't participating, but when those stocks came down, it wasn't like the market came down. The market just simply, that money found a new home somewhere. Yeah. And that's what you want to see. So I thought it was pretty good action.
Yeah. I mean, the NASDAQ was up strong today, and then it went red and then right back. I mean, the bid underneath the market is as strong as I've ever seen it, Tom.
Yeah, I don't know. Maybe the 90s, it was pretty, it was pretty crazy back then. But I think now it's a little different, just because we got a completely different interest rate environment. We got some of these companies that are, going up a lot in value, are also growing their earnings rapidly, even in this pandemic that we've been through here in 2020. So I don't know. I personally, I think it's justified, and I think prices go a lot higher.
Yeah. Okay. Well, I'm going to turn it over to you. I know you show it later, but I want to mention to folks, every time we have one of these webinars, we have a webinar special. Go right to earningsbeats.com. You'll see at the top, it says webinar special. That's going to be a great deal for you. You get 13 months instead of the normal 12. You'll save a lot of money over the course of the year. So if you like what you see, go ahead and take advantage of that. If you aren't already a trial member, you can sign up right in our site under the membership section, $7, and you'll get that refunded. So it's really a no-cost 30-day trial, We have an awful lot to offer, and hopefully you'll take advantage of that. Anyways, I'm going to go ahead and step aside.
All right, sounds good. Let's jump into the agenda for today. This is not going to be a very long webinar, by the way. I can tend to drag on for a while. I'll try to keep it fairly short, but we're going to get into our primary, kind of our flagship strong earnings chart list. This is what really what earnings beats started with, and we kind of built around the strong earnings chart list. And I'll show you some of our scanning strategies that we use versus the strong earnings chart list, and also we use it on our other chart lists as well. And we'll go through some of those examples, how you can run these scans, and also I think it'll be a good stuff. But before I get in that, I do want to just kind of show you very quickly what John was just referring to. If you go into our site, earningsbeats.com, and you click on this webinar special here at the top, it will bring you to this page. And so this is a special that we generally run with all of our webinars. So if you do like what you hear, if you're on the trial, or maybe you're a new member, you're thinking about a membership, you do have through Wednesday the 26th on this webinar special. Normally at the end of a trial, you'd be charged $97 a month. And if you did that for a year, $97 a month would be $1,164. With this 1 month membership bonus, that'd be another $97. So you're talking about $1,261. The annual is $697. So you save a lot of money. That's definitely something to consider if you are a current trial member, or if you're a current monthly member, or someone who's thinking about a trial. Just keep that in mind that through Wednesday, we've got this special running. All right, let's jump over to stock charts. And by the way, I know this maybe is a little confusing for some, because I'm always talking about stock charts. I talk about using chart lists over there and so forth. We're not affiliated with stock charts. We just simply have a great relationship with them in terms of, I write over there, I do shows for them. But if you sign up for stock charts, Earnings Beats get zero. We're not affiliated at all. We get nothing from them. It's just something that I do. I've used stock charts now for many years. And honestly, I don't know how I would trade without it at this point. I just think their tools and the features over there are awesome. And that's really a little bit of what I'm going to be talking about tonight when we go through these scanning strategies and look at the chart lists. But this is our strong earnings chart list. This is the first stock in it, which is CrowdStrike. I go through, and these are all essentially chronologically ordered. CrowdStrike reported its earnings. Of all the stocks in this chart list, it would have reported the longest time ago. I believe it was back in the early part of June. So CrowdStrike will be reporting again soon. And that's the key. When you get one of the, these older stocks on here that have been on this list for a while, these are companies that are going to be reporting fairly soon, probably within a week or two, here at the first 20, 30 names. And then the ones that were just recently added in August would be down at the bottom. So NetEase reported not too long ago, Applied Materials, you can see AMAT there. And so they just get added. I'm not sure why it's been doing that to me lately. I'm not sure why I'm getting these other charts. But anyway, you can see Applied Materials came out with their earnings, gapped up, tried to break out, it's pulled back. Actually had a nice reversal today off of this a downtrend, put in a higher high. So this probably is on a scan that I'm going to be showing you in just a bit, which is a pretty cool scan. But the whole idea here is that the strong earnings chart list becomes our research, really. I mean, it's our chart list that we do a lot of trading from, that I personally do a lot of my own trading from. And I think it presents our members with a lot of opportunities, depending on what your style is. So for instance, I can go in here in the strong earnings chart list, pull this up, view the list in summary form, and I can put it in order of the name. So I've got it chronologically. That's why I put these numbers here so that you can literally follow it in order here if you'd like. Or I could say, okay, let's just order this in terms of Scooter, which is the stock chart's technical rank. So you can do it that way and see which stocks have the highest rankings over at stock charts. You can quickly see some of the stocks that have had the highest rankings didn't really fare well today. Market was up, but look at all these red, all the red here. Novavax, many of the biotechs, a lot of the healthcare got hit today. I think healthcare was the worst performing group in the market. but also some of the software stocks, some of the technology names that have been really strong, got off to a good start at the open and then sold off. I saw Tesla go down $200 in 20 minutes. It opened, it was 21.20, and I think it was 19.20, literally in 20 minutes, 25 minutes. I don't know, maybe may have been 15 minutes. I'm not sure. But a lot of these stocks sold off early, and that was kind of that rotation I talked about. Very quickly, money rotated out of some of those areas and went into other areas like the airlines, cruise lines, travel, and so forth. But anyway, this is another way to look at these chart lists. Also, I could say, well, let's look at, let's see, we've done the scooter. Let's pull it up by industry and then by sector. And so if I go all the way down, I could go down to technology, for instance. And here in technology, we've got it set up in alphabetical order by industry group as well. So you got technology, then you got computer hardware, of course, Apple, which had a pretty good day. But then you had Synaptics up 6.5% today. Diebold up 5.8%. So some of these computer hardware stocks did very well today. And then you get into computer services, electronic components. There's semiconductors. Semiconductors not exactly having a great day today, but not too shabby. There was pretty nice rebound in some of those names. And there's your software stocks. So you got a stock like Digital Turbine, APPS. This stock has been on fire. It opened the day at 28 and change. It was down to 23.5 at one point this morning before rebounding back to 25.70. So some of these names that have been growing fast, many of the growth stocks took a little bit of a hit this morning. But as I mentioned, I thought it was actually bullish because when you start losing momentum in some of the leadership in the market, it's pretty cool when that money rotates over into other areas of the market rather than leaving the stock market altogether. If it leaves, then the market comes down. We start, seeing a little bit more fear in the market and so forth. That's not what really happened today. This was actually pretty good action. All right, so that's essentially what I wanted to talk about. I want to talk about this chart list and what we do at Earnings Beats to try to create some solid trading opportunities. So over at Earnings Beats, if you're signed in as a member, you can go under this members tab over here and you can see several different things that you can go in and check out. But the one I want to focus on tonight is scanning strategies. And so under scanning strategies, what I have are 5 scans that are fairly basic scans, but they do different things. I've got a high volume scan. And by the way, this is the syntax. So you literally could just copy that and take it right over to stock charts, dump it into their scan engine, run it against our chart list, and within seconds have stocks that are meeting that criteria. Then we've got a downtrend reversal scan. This personally is one of my favorites. It's simple, but it's so effective. What you're looking for here, remember, we're running it against a strong earnings chart list. So we already know we've got companies that have great fundamentals. They have pretty good technicals. They wouldn't be on this chart list if they didn't already beat revenue and earnings estimates. That's one of the requirements. In order to get onto this list in the last quarter, you have to have beaten your top and bottom line estimates. Then you've got to be liquid. We don't want stocks on here that trade 2,000 shares a day. And then finally, there's got to be something technically that looks good. Either it's in a great group or it's a relative leader. Something about the stock has to be good in order to be included on the strong earnings chart list. And so then when you run this downtrend reversal, what you're looking for is a company that's putting in a new daily high versus yesterday's high. But for the last 5 days, the daily high has been less than the previous day. So you can kind of picture visually that this stock has had lower highs for 5 days in a row. And then all of a sudden today, the daily high is higher. So it's a potential reversal off of a downtrend. And that's when I want to catch a stock. I want to catch a healthy stock after it's pulled back and begins to show a sign of reversing back to the upside. So we'll pull that one up in just a minute. Then we've got a simple 20-day EMA test, RSI 40 to 50 test. Both of these are pullback scans. I like to buy stocks when they test their 20-day. I like to buy stocks when the RSI moves down into the 40s. So those are 2 pullback scans to try to get a better reward to risk entry into some of the stocks. And then the last scan is a 52-week high scan. which is very simple in terms of the syntax as well. But let's go ahead and I'm going to just show you, first of all, how you can just take this, copy it, and go over to stock charts. Let's go in here. And if you scroll down here, you should see your scans. If you don't see your scans, then it's probably because over here on this gear shift, you haven't checked off scans and alerts. So if you don't have that checked off and you save the preferences and you go down here to look, you're not going to find scans anywhere. They're gone. All right, make sure you have that box checked, or that little circle checked. Scans and alerts, save preferences, and then you come down, here's your scans. Now, I'm going to go ahead and just act like this is a new scan. So I'm assuming you're coming to stock charts, you just left earnings beats, and you've never used the scan engine. And so this comes up as your default. Get rid of it, and then just paste what we just copied from over to earnings beats. So right here, I just copied this syntax. If I come back over to, whoops, here we go. Come back over here, now I can paste, and there it is. Now, we've seen the close. This is actually designed to be run in the morning because you can see that the daily volume is greater than the average volume times 0.4%. So let's say a stock normally trades 1 million shares. If we run this scan and the stock has already traded 400,000 shares, which is 40%, it will show up as a scan result here. Now, if I run this scan now after the market's closed, well, just about every stock, I mean, just to show you, let me add in our chart list. So you go into the chart lists, go down to strong earnings chart list, you add it. And by the way, this number that this number right here, this favorites list number, this is going to be different in everyone's account. So you don't want to copy and paste this into your scan in your account, because stock charts is not going to recognize the strong earnings chart list as being your favorite list number 54. It's my favorite list number 54, but it's not going to be yours. So just remember that. You need to, once you're a member and you download these chart lists, which you can get, I don't want to spend any time on this, but if I pull down, if we go over here to chart lists, this is where you could actually get our chart lists and download them right into your account. There's a link with a password that you need. But you click on that link, type in that password when it prompts you, and it'll give you options to download our chart lists right into your account. Take 5-10 seconds. All right, so anyway, back to the scanning strategies here. So on this high volume scan, I can go ahead and type it in. If I use the strong earnings chart list, which is what I want to run the scan against, I type that in. Now there's 483 stocks. Let me just go ahead and always check syntax, make sure the syntax is good, which it is, and let's run the scan. 439. Now there's 483 on the chart list. So apparently there's 44 that didn't get to 40% of their normal volume today. But essentially just about every stock on the chart list is included. And that's because I left this. This is normally a scan I would run around 10 o'clock in the morning, half hour after the market opens. Because if a company has already has already traded 40% of its normal daily volume in the first 30 minutes of trading, that's probably a stock I want to look at. I want to see what's going on. So that is why I have the 0.4. That's why it's saved as that. Now I could do it now, and let's say, okay, now it's the end of the day. So let's say 2.5 times normal volume. And check the syntax is good. I run the scan, and now I have 5. So my 439 stocks just went down to 5, because now, in order to make this list, a company had to trade more than 2.5 times its normal daily volume. All right, well, there's Digital Turbine, the one I was talking about earlier, APPS. Check this out. So you got the stock, which has been on fire. I mean, this was a $12 stock 4 weeks ago. It just went up to 30 yesterday or Friday. Went all the way back down to 23.01 today, and then came back and reversed and finished at 25.70. But if you had checked early in the morning, you'd have seen the volume was heavy. The selling was big. You might have pulled the chart up and said, hey, I'm getting a 20-day test. You might have pulled the trigger. I don't know if you're somebody who likes to trade the 20-day. But that would have been from 23 to 25.70 if you'd been fortunate enough to get in on the low or close to the low. That'd been more than the 10% move back up. in the same day. So that's why you want to try to catch these early in the day if at all possible. A10 Networks, this one bounced right off its 20-day. It actually closed just a little bit below on Friday, but came roaring right back. Look at the volume coming in there. Very nice day. Looks like it closed maybe at a new high. So nice action there on A10 Networks. EXP World Holdings. Now this one, it's coming down, but it's way above its 20-day moving average still. Down 8%. There were a lot of good companies that just got hit today. I wouldn't read a whole lot into it other than these stocks have been going straight up, and when they go down fast. Just like when they're going up fast. The Groupon's been on fire ever since gapping up here in August. You can see multiple days where we've had huge runs. Another 16% tacked on today on Groupon, big volume. It's got to try to get through about 36 bucks, but that would be next on the radar. And then the last one was Grow Generation. This stock was on fire for about 3 weeks, 2 weeks, really 1 week where it was really on fire. But the last couple of days, including today, you can see we've pulled back quite a bit. The stock was up to $23 on Wednesday of last week. Today it hit $13.44 and got close to that 20-day moving average. So that's the power of using this particular scan. The high volume is that maybe first thing in the morning you might find some opportunities. And a stock, if it goes below its 20 days, one of my strategies is if a stock, which has been really strong, goes below the 20-day, let's just, let me pull that GRWG up again. So let's say tomorrow the stock goes down to 12 intraday. Sometimes one strategy I'll play is that if it goes back up above its 20-day, I'll buy it. So I'll put a stop buy in at 12.92. Stock will be trading at 12. I don't want it at 12. Might be breaking down. Maybe it goes to 10. I don't know. But if it goes below the 20-day down to 12, 11 and a half, and then comes back and moves above the 20-day, a lot of times that's your 20-day test. So if I catch that early, that's a strategy sometimes. Now you got to be somewhat aggressive, because if stock goes to 12, goes back up to 12.92, what I do is I set my stop back down below 12. So you'd have to be willing to give the stock probably about 7.5% downside, which is a lot. And it might stop out that day. But the flip side is if this thing moves up, tests the 20 and moves up again from 12 to 22 or 23, you're looking at a lot more than 7.5%. You're looking at about 90% to get back up there. I don't know if I'd hold it that long, but I'm just saying that's kind of some of the things I look for on a stock that's pulling back hard, that's been very volatile. All right, the next one I had is the downtrend reversal. And the downtrend reversal scan, here it is. I'm going to go ahead and copy this. Going to bring this over here. Can get rid of all that and paste. And by the way, if you're doing this for the first time and you don't have any saved scans, what you can do is take it from our site, put it over here, and then once you get to this point, I would save it. And you can just say save as and then type in whatever you want for a description, downtrend reversal scan. I have mine ordered. So I have the high volume, and then I've got all these in order. These are the ones that I generally will use. But you can do it however you like. But that's what I would suggest. Then you don't have to keep copying it and pasting it over into your account. You've got it at that point. All right, so here is the scan, and now once again I have to add the chart list, because right now this is just going to run it against the overall market. And maybe that's fine. Maybe you want to run it against the overall market, but I want to run it against the chart list. So I want to know if any of my strong earnings chart list stocks are reversing. And I'll add that. And now check syntax. Syntax is correct. Run the scan. 21. Oh, and there's applied materials. That's one I was looking at. So applied materials right up on the scan. We pulled the chart up in a nice uptrend. That was the earnings. And then look at this, 5 days in a row, lower high every day. Finally, we get the higher high. So this is a scan maybe that keeps you from getting into a stock too soon, you know, where you see it pull back for a day or two and then you jump in. This actually makes you wait for at least 5 days to the downside. Doesn't mean it's going to turn out to be a winner, but it does mean that you're going to get it a lot cheaper than you would have if it didn't hit this threshold. Let's see, we'll look at maybe one or two others here. Builders First Source, BLDR. Yeah, down 5 days in a row, puts in a higher high. Now, the other thing you can do is you can always go back and back test. So let's go back, I don't know, 9 days. And these will be trading days, 9 trading days, not calendar days. So check syntax, run the scan. So 9 days ago, there were 2 of these. So we had Elastic, we had Ring Central. Ring Central, this would have been right here. Here was your downtrend, and here was where when it got broken, moving back up. I'd say, you know, really hasn't done a whole lot. Went up a little bit from there, pulled back, and it's probably about flat from where it ended that day. But if you got it earlier in the day, if you were in the scan, you know, midday or something, maybe you got a little bit earlier and a little bit lower. And then the other one was ESTC. And that one actually panned out perfectly off of the downtrend. There's your reversal, and look at what the stock's done since. So you can kind of get a sense for what you're looking for in these stocks. And the ones I find maybe even most powerful would be companies that are going to be reporting in a few days or maybe a few weeks. So let's say a stock's gone down 5 days in a row. It's going to be reporting in the beginning of September. And I don't know when the ESTC reports, but here it pulls back. Sometimes you get this reversal and it starts a pre-earnings run to the upside. And we saw that recently. I think it was with CrowdStrike. CrowdStrike reports at the beginning of September, I think. And here it was, 5 days in a row. There's your reversal. And look at this move up heading into earnings. So that's another potential strategy. All right. So that's the downtrend reversal. Let's take a look at the 20-day EMA test. So on the 20-day EMA test, I already got this over here, so I'm just going to pull it up here. Now, the one thing that I make sure is I put in here scooter greater than 75. I mean, you could put in 85, you could put in 90, you could ignore it and delete it, whatever you want. But for me, I want to just make sure that my strong earnings chart list is being used as a filter. Also, I like to use the stock charts tactical rank. When you come over here to the 20-day test, you'll see it right here. So there, I do have the scooter in there, but you can pull that out. It's not absolutely necessary. And then we're going to check the syntax, and we're going to run the scan. And 25. So you get 25 of them. Now, maybe that's too many. Maybe you don't. Maybe you want to say, okay, let's go back and let's really narrow this down. There's a bunch of them, so let's go with 95 as the scooter and run that. These are going to give us hopefully even better stocks. There's 8 of them. 8 of them with scooter above, well, it should be above 95. This one's 94.6. I'm not sure why it would be in there. But anyhow, the others, you can see all of them are high. And then you can take a look and see if maybe some of these look better. So Fastly, starting to turn. This could be a cup off of an uptrend. So it's coming down, testing its moving averages. I think that one looks kind of interesting, although I'd really like to see it break back out above 91, 92. And then we go back. Workhorse Group. This one's just been sideways consolidating for a while. Next one was Peloton. Peloton coming back, testing that 20-day moving average, down 3.5%. A lot of these stocks got hit a little bit today. Big Five. I know this one was up at 8.5 recently. Now, 2 weeks later, 3 weeks later, you can see it down at 6. So, you know, these pullback scans, that's what they're designed to do, is to catch these stocks for us when they're pulling back. All right, fourth one is the RSI 40 to 50 scan. So let's go over here, and I'm going to pull up my RSI 40 to 50 scan. Got to add my chart list, strong earnings chart list. Add it, and so now it's going to give me anything with an RSI between 40 and 50. I have a feeling we might see a bunch of these, but let's just check syntax. Run the scan, and yeah, 82 of them. That's way too many for me to try to filter through. So we could do something similar with the scooter. You know, here got Citigroup with a scooter of 14. That's probably not going to be one I'm going to be too interested in, but I'm probably going to be very interested in the ones that have scooters up 97. So what we can do is maybe do a couple of things. First of all, the RSI between 40 and 50 is the scan, but maybe we just lower that to 45. So it's between 40 and 45. That'll get rid of the ones between 45 and 50. And then let's go ahead and add a scooter. Let's just make sure it's at least 90. So there it is, greater than 90. Now I'm going to check the syntax. Run the scan. And 4 stocks. It's very manageable. I can take a quick look at these 4. I know these got hit pretty good today, so that would explain the RSI coming down. But let's take a look at the first one here, Chegg, CHGG. So the stock down 5.5% today, actually testing its 50-day moving average. I'm going to get rid of the accumulation distribution, and let's put the RSI in here. And you can see the RSI coming back down here at 43. Now, if you want to know why I get interested in these stocks when they get down, their RSI goes into the 40s, you can kind of see back in June when we were down here below the 20-day moving average. We got down pretty close to gap support. At this time, you could see the RSI had just barely dipped below 50. So it would have come up on the scan. And look what happened afterwards. Stock rebounds and moves higher. Same thing a couple weeks ago. Looks like maybe August 11th, 12th on this pullback. RSI dipped below 50. That was just 3 or 4 days later, but this is a move from 74 bucks up to 82, 83. More than 10%, 3 or 4 days. Would have been on a scan then. And then now here we are again with the RSI back down into the lower 40s. What else do we have? How about K12, which is LRN? This one got hit pretty good today as well, down 2.7%, getting close to the 50-day moving average. Volume's been much lighter on the selling than we saw on the way up. So that's positive. You got the PPO getting very close to a centerline test. Like to see a reversal. This one might be one of those you might want to wait for the downtrend reversal scan. It's been down 6 days in a row now with the highs. So this one should show up. I mean, the first day it puts in a higher high, it should show up on that scan. And then let's do, well, Novavax I know got hit. We can pull it up. Back down to that low that it saw about 2 weeks ago, near gap support, and also testing its 50-day moving average for the first time since mid-March. And then the last one, QDEL, this one has struggled to get back through the 20-day, came back down, pulled back again, but overall accumulation distribution remains strong. I'm thinking 220, and some of these, because they've gone up so much on the daily basis, on the daily chart, they may not look great on the daily chart when they start to pull back, but you probably want to take a look at the weekly chart. I think that'll give you a little better picture because these stocks have gone up so much. And you can see on this one, as it's been moving up, PPO's been very strong. We haven't even gotten a 20-week test yet on QDEL. That's down at 207. So it could be another 20 bucks, another 10%, if this were to go all the way back down to the 20-day. I still like the stock, but short term, we've got a lot of volatility in the market. All right, let's go over to the last one, and that's the 52-week high scan. So again, there's your syntax, and you can copy any of these and take them over. I'll go ahead and copy it and show you one more time how we can do this. So you end up coming in here to a blank screen, or the default, you get rid of it, and then you just paste. And so now I've got the high greater than yesterday's daily max, 253. So this is how you write that scan. And then we add the strong earnings chart list, and we'll find out how many hit their 52-week high today. And run the scan. 50. So 50 out of 483. So almost 10, well, actually a little more than 10%. hit their new high. And then you can sort it by scooter if you want. Sometimes I like the ones that have lower scooters that are just setting a 52-week high because they probably have been consolidating. So Google, scooter of 74, Google goes to an all-time high today, or at least a 52-week high. I'm pretty sure that's all-time. Let's see, what else did we have in here? How about, let's look at specialty chemicals. Materials have been doing a little bit better. Well, this one just been pretty steady, hasn't really pulled back much. So let's try and look at one more different one. Well, Texas Instruments, I know semiconductors, this one broke out recently, pulled back. Here was the breakout. I think this was earnings related. Pulled back to the 50, and now it's back off to the races again. Didn't have 5 days in a row, so it wouldn't have been on that downtrend reversal scan, but it did move down, hit the 50-day, and print a hammer. And since then, we've been pretty much straight up every day. So trying to catch these stocks and pullbacks, I think personally, is your most rewarding in terms of trading. All right, those are the scans, and that's essentially what I wanted to go over. Like I said, I didn't think it would take very long today. But if you are new to earnings beats, you could just check this out. Go back in, copy those scans. Again, once you get into our site, on the left navigational panel, look under members. And we've got the scanning strategies here. We've got ChartList. You can take a look at our portfolios. We've got our webinars. So this one, along with every other one's listed. We'll probably be changing the look of our webinar page pretty soon. But you can see all of these recordings. So this one will be up later. So you can always go back and check our recordings later if you can't attend one of these live. That's pretty much it. Again, I just want to point out this webinar special. So anyone in here, any of you that are currently trial members or monthly members, I would suggest you at least come in and consider this before Wednesday. You can get 13 months for the price of 12, get an annual membership, save a lot off of the monthly rate. So we'd love to have you. And those of you who are new to Earnings Beats, I'd encourage you just go into our homepage and click this Join Today button. $7, I think that John mentioned this at the open. It's $7, but we'll refund it to you. So you get 30 days, no cost. So you can check out everything we have and see if this helps you with your trading and investing. I think it will. All right, that's it. John, do you have anything to add?
No, there was just one question or comment. I think it's recommended to put first the list in order to make the scan faster, isn't it?
To put the list in order, I'm not sure. Like on the,
I'm not
this?
sure either.
Yeah, I don't know. I've never heard that. And I talked to Bill Shelby quite a bit, and I've talked to him about scanning, and he's never pointed that out to me. So, I mean, I don't have any problems with it being fast. I mean,
Yeah.
it usually comes back immediately. And when I was doing the scanning, the results were coming up in a different window, but it was coming up pretty immediately. So I'm not quite sure what the question is really asking there. I have not had any problems with the time.
All right, let's go ahead and wrap it up. And I want to appreciate and thank everybody for taking the time to come in. We'll make sure you get a copy of the recording and have a good evening.
Happy trading, everybody. See ya.